Rising petrol prices, emission of gaseous pollutants, acceleration on the road, and many more factors like these have made people rethink their choice of buying a petrol or diesel car over an electric one. Ultimately, this choice has impacted the market value of electric vehicles. Just as 2023 is around the corner, and with the rising production of EVs, the electric vehicle sector is a good place to invest your money in the following year. If that sounds interesting, make sure you stay till the end of this video, as we'll be revealing 5 of the best stocks you can invest your money in for 2023. 5. NIO. On December 12, 2022, NIO took it to social media platforms to announce the 300,000th car to roll out of the production line. This alone is enough to convince you how much experience and demand they have in the car manufacturing industry. Their growth has been on the exponential case. This Chinese multinational company was founded in November 2014 and is known for developing battery swapping stations for its vehicles as an alternative to conventional charging stations. NIO's first car was the EP9 electric hypercar, presented the same day the brand was launched. Now that was back in 2016. Within a span of just 6 years, they have crossed 300,000 landmarks. Although the shares of NIO have suffered quite dramatically over the past year, losing roughly 3/4 of their value during this time, nevertheless, the company remains a leading player in the Chinese EV market, whose growth remains rather explosive. In quarter 3, NIO achieved record high deliveries of 31,607 vehicles, including 10,878 vehicles in September, representing a year-over-year increase of 29.3%. Combined with higher pricing, revenues rose 32.6% to $1.83 billion, while the company remains unprofitable. The stock trades at just 2.4 times this year's projected sales. Thus, once NIO's economies of scale start to kick in and the first profits flow, the stock's current price levels could substantially undervalue the company. Like many Chinese stocks, NIO has had to navigate the country's continuing pandemic restrictions, and the stock is down more than 65% since the beginning of 2022. However, NIO recently announced that deliveries were up more than 29% yearly. The company also has aggressive expansion plans in Europe. At present, NIO is in a very good financial situation and is worth over $8 billion. That amount of money is more than enough capital to develop upcoming products, so be sure you don't miss out on this one. Number 4. Lucid Group. Founded in 2007, this American electric vehicle manufacturer was once an electric vehicle battery developing company in its early years. After stepping into the EV manufacturing sector, their first car came out in the year 2014. The company began publicly trading in 2021 through a special purpose acquisition company. The company is beginning to deliver on its promises. For example, unlike many startup EV companies, Lucid is delivering vehicles. Investors will need to be cautious and patient. Like all EV makers, Lucid faces supply chain issues. On the other hand, having supply issues that are likely to be transitory is different from demand issues. But apart from that, they're doing well. Lucid, in collaboration with McLaren Applied Technologies and Sony, developed and supplied batteries for Formula E race teams. Besides that, Lucid Motors partnered with Electrify America to use their nationwide charging network to recharge Lucid's electric vehicles on the road. The Lucid Air, one of their EV sedans, will be able to add 300 miles in 20 minutes when using the station's 350 kilowatts charging capability. Coming to the stocks, the supply chain issues continue to be a cause of concern, but Lucid stock is quite beneficial in the long-term play. The company has already bucked some long odds. On February 28, 2022, Lucid announced a long-term plan to build a new manufacturing plant in Saudi Arabia with the capability of producing 150,000 vehicles per year. With cars already in production and more models on the way, Lucid is one to watch closely. Number 3. General Motors. This company is possibly the oldest on this list. Founded way back in 1908, it's the largest automaker in the United States and was the largest in the world for 77 years before losing the top spot to Toyota in 2008. They have manufacturing plants set up in 8 countries. Some of the very big and popular car brands that you know come under them. Its 4 major automobile brands are GMC, Cadillac, Chevrolet, and Buick. General Motors also holds interest in Chinese brands Wuling Motors and Baojun, as well as D-Max through joint ventures. Additionally, GM also owns the BrightDrop delivery vehicle manufacturer, which is a namesake defense vehicles division which produces military vehicles for the United States government and military. They also own information services provider OnStar and the auto parts company AC Delco, and majority ownership in the self-driving cars enterprise, Cruise LLC. They were not the first automaker to embrace electrification, but it's making up for the lost time. While not on the same pace as its rival, Ford, the company still has ambitious plans. By the end of 2024, GM plans on selling 400,000 EVs in the United States and 1 million by the end of 2025. The company is on track to sell 44,000 EVs in 2022. Like Ford, General Motors targets a mass market for its electric vehicles, and it may serve the company very well, with inflation likely to be elevated well into 2023. On the other hand, the company also plans to launch GM Energy, a new business unit that is designed to better position the company against Tesla. This will include 2 new versions of the company's Ultium Charge 360 public charging service. Considering its stock, GM has a price-to-earning ratio of 6.7 times, which makes it a very attractive choice among growth stocks. Number 2. Ford. They were the first of the major US automakers to go all in on electrification, but that transition was not without some pain for shareholders. To its credit, the company stayed the course, and institutional investors are becoming more bullish on Ford's ability to transition to a company that will primarily make electric vehicles. For now, that appears to be a good bet. Ford says that it has secured the annual battery cell capacity that it needs to meet its goal of selling 600,000 EVs in 2023. The company has broader plans to manufacture 2 million vehicles annually by 2026. Of course, inflation is affecting those plans, and Ford is paying over $1 billion in additional supplier costs in the current quarter. Number 1. Tesla. Investors valued it as a technology stock rather than an electric vehicle stock. That was back when Tesla stock was flirting with the $1,000 level, and the valuation of Tesla was called into question, as was its ability to deliver vehicles. A couple of years and a stock split later, Tesla is nowhere near $1,000, but the company is undoubtedly delivering vehicles, but the question of valuation still remains. And some of that concerns Tesla's founder and CEO, Elon Musk. The owner recently sold $4 billion worth of his Tesla shares to help pay for Twitter, his latest new project. That has some shareholders concerned about Musk's focus on Tesla at a time when the stock is at a 2-year low. But chances are Musk will prove over time that he can walk and chew gum simultaneously. Cathie Wood seems to agree, and that's why Tesla remains one of the no-brainer EV stocks to own for the next EV revolution.